This is actually, I think, where it bounced off the 10-week, but good low-risk entry for getting in, and your stop is tight if you're looking to establish a position.
And yeah, can you just point out for folks, just to be clear, where that was on the daily as well? Sorry. So this is the 60-minute here.
Yeah, so this was on the 27th
Mhm.
of June. So there's that big spike down, and that was on a report that so it broke the 21. We did get stopped out of some on this day, and in fact, we haven't added it back as well. But all it did, and this is why it's so key to have a weekly chart and a daily chart. It never touched the 50-day moving average, but the 10-week is typically higher.
Mhm.
It not typically. It's a rare instance when it's not, and that's because in a bull market you're only looking at 10 closes. Typically, you close toward the top end of the week, and that's why the 10-week is always so much closer to price than the 50-day is. It never touched the 50-day, but it sure as heck did come into the 10-week. And if you look at that and you're using weekly charts like O'Neill did, you'd say there's absolutely nothing wrong with that stock. It's a normal pullback to the 10-week. In fact, it's an opportunity to get back in.
And if you go back to that weekly, what a perfect model stock in the making, and still present right now, starting from that a monster earnings gap in June of 23, with a nice earnings beat and surprise all the way there. So
Yep, all the way back there. Yep. Let's quickly show that I mentioned that corrections typically in uptrends are typically held by the 20-week or the 30-week. You can see
Mhm.
during this uptrend here, the green line is the 20-week, the light purple line is the 30-week. So pulling back to that is normal. You will usually find yourself getting stopped out of some things unless you give them a very wide berth, but the market should right itself around the 20 to 30-week moving average and continue the uptrend. And if it doesn't, then you're looking at the 200-day, and then we know what happens. Nothing good happens below the 200-day, as Paul Tudor Jones likes to say.
What are you guys looking at in the moment during the start of a correction? Is there anything that can indicate whether it's just going to be a more short-term pullback that recovers versus something more significant that slices below the 200 and can cause a lot more devastation? And this one was a quick snapback, but in 2022, it took a lot longer to get back to the previous highs. So what are you guys looking at in real time during the correction to make sure you guys are protected and preserving as much capital as possible?
Yeah, it's the action of growth versus the value names. If both growth and value are selling off, that's money leaving the market.